Good morning, everybody. I hope you had a great evening last night. It was really nice here in Wichita. Summer has returned. Temperature in the mid-90s, but humidity was reasonable. A little moisture in the forecast, not much. So we're looking for a week of summer temperatures, and by golly, it's August, and that's the way it should be. So here we sit, Friday. We've had a pretty good week of trading. It is an auction week. And usually on post-auction days, like I've said, the big players are sidelines. The primary dealers are adjusting the books and their positions. Anybody that wanted 3, 10, 30-year paper treasuries is out of the market today. So we usually look at a trading range day. And today I don't think will be a lot different. We have a lot of news on tap today. That news can cause a reaction. Everybody says the market's focus today is Michigan sentiment, which should be higher. So we'll see. PPI is expected up 1/10. Core up 2/10. Long-term capital flow we'll call it tick, plus 27. Empire Manufacturing Index, that's New York State. They do have a high opinion of themselves, don't they? Every dollar in the world passes through New York at least once in its journey to wherever its final resting place is. Called plus 20. That's be a pretty healthy increase. Then we have industrial production, the heavy one. IP today up 3/10. Up 2/10 last month. This is the market's focus. Capacity utilization, nobody will pay any attention to that number until inflation comes into play, and then it's got to be about 84, 79.3. And then Michigan sentiment at 82 something, 82.3. Coming up from 81.5 last month. So stock market is higher and it's holding its gains. Michigan sentiment should be up. So the way the numbers will play out in importance today, industrial production for sure. Depends if you believe the press or not. They say Michigan sentiment is number 2 and 3 is manufacturing. But this is going to be first piece of news out that will cause a reaction. This is the second piece of news that will cause, and it could cause a reaction. And then the third piece will be Michigan sentiment. Okay, France and Italy's bank holiday. All stock markets around the globe are up strongly. Follow-through buying from our stock market yesterday, minimally. If you read the gist of the articles out there, everybody's talking about company performance is pretty good. Earnings per share is coming in pretty much as forecast. If any economy is going to outperform the others, it's going to be the United States economy by U.S. stocks. Now, that seems a little securitous to me, but that is the logic, and the stock market is up. And so you can't ignore what is actually going on. So I see a trading range market today with a seller 12 in the 12 to 16 area. So that'll make it 11 to 15 sell. Sell failure to press higher. We are pretty high. The knob spread has widened than our 19 to 23. And those would be new contract highs on this move. It would be a pretty strong market. On the buy side, like we had last night, that 5 to 1 area looks pretty good. As support, would be picking this up down here. So Let's come inside it a little bit. We'll make it 3 to 7. Give ourselves a little bit of room. And then 29 to 01 for buy 2. Okay, I put an article up there by George Soros about George Soros's holdings. And these are real holdings. To me, it's the if you could find a way to spread it. If I were George Soros, I would be long the U.S. stock market, short China. I think what George Soros is doing, he's long the stock market. He'll ride it as long as he can, but he also owns put positions. And the thing that you need to know about George Soros is that he is a fabulous long-term player. He is one of the top 5 traders. He's built his fortune on an annualized return of 30% for himself and for his players. So George Soros owns puts on the U.S. stock market. Well, who wouldn't? I mean, if you read all the news and see all the potential for disasters. So he's still long the U.S. stock market. He owns a lot of puts. At some point, that put position is going to pay off handsomely. There is a cost involved in that, and he's willing to bear those costs because he's such a huge investor. He has to make long-term plays. He can't move his money in and out of the market as nimbly as we can. So I think his short positions, his put positions, reflect the reality of today's market. Everybody says we're high. Looks like we're holding our gains, but my God, the bottom can fall out of the market. So I'm going to get some puts as protection. And a large player like that does not have the luxury of going from long to short and reversing positions intraday like we do, being small players. The market doesn't even know we exist, other than the fact they like to pick our pockets by gunning stops. So that's my take on Soros's position. Okay, here we are. We want to sell failure to take out this 10 to 16 area. The knob spread is really holding in well. You see 4 contracts have traded at 11. Then if we break it out to the higher prices, and I think it would take some selling in the stock market to do it, 23 to 27. But really, after an auction, we should see a pause day. So we're headed higher right now. The knob spread is strong. Really, really good support here off this London low at the buck, 39.30 the buck. Last rotate down was 4. We're at 9, so this 40.04 will be buy 1, and buy 2 will be 25 to 29. Don't know where the top is. We're still making new highs, but if we fail to take out this point right over here, 11, we'll play for a pause day, as with the large players consolidating. Okay, looking at gold. From what I've read on the what's going on in the Ukraine, you saw a lot of armored personnel carriers with white bunting draped around them, canvas stretched tight with big red crosses on it. The supplies, from what we can tell, that Russia is sending into the Ukraine are legitimate, like grains, stuff, and the rest of it. But the people driving the trucks and some of those trucks and vehicles are clearly military vehicles. So I don't know what Russia's ploy is. There's also another story out that Russian troops have once again re-entered the Ukraine through an unguarded checkpoint between the Ukraine and Russia. Hard to know exactly what's going on, but These guys know how to negotiate, they know how to play, they know how to wring every last penny out of every deal, and it's good cop, bad cop. The market reacts with euphoria when they say peace is coming between Russia and the Ukraine, and it goes the other way when the events say that clearly it's not so. So on gold, we're still in a situation, we got a seller at 13.20. We've had a buyer at 5 to 7. We're at 11, so let's make 5 to 7 buy one. We're pointed lower. It may take 10s to get in. I don't know. I don't think anything has changed in the Russia-Ukraine situation. 1300 plus or minus will be buy 2. In Iraq, Malaki says step down. He will support the new government. I guess he's got enough money looted from the Treasury that he can afford to do that now. It took him several days to get his finances in order, but he's going to support it. And he says he lost his office because of the CIA. I think he lost his office because no one has faith in him as a leader. Even Iran threw in the towel on him, and Sistani said nothing to counter that. So we're going to play for a trading range. That 1300, 1305 is probably pretty good support. 1317, 1320 is probably pretty good resistance, and might take a 1310 to get off along. Don't know yet, but we'll play for a little cheaper. Peace is breaking out in all over the globe. Okay, the euro held in pretty well overnight. Again, longer term, I think it's down. That's the side to play from. So puts, we've rallied back up to this 134. When you look at it, we've got definitely have a buyer in the 33.50 area, and we definitely have had a seller in the 34.25.30, and here we are basically at 134. So last stroke value area high is at 96, so sell 1 is 134 plus or minus, and then we'll make 15 to 25 for sell 2. On the buy side, we've got our 65, 75 buy 1. And then we'll make it 45 to 55 for buy 2. Stops below 50. Don't have a strong feeling on the euro. Longer term, I think it's a great short. Why? Because the European Central Bank wants the currency lower. And they'll at least talk it down, and they'll make announcements to at least stop the rallies. Crude is telling us that oil supplies are intact. You don't have to worry about that. And dynamics, one of the things that is pretty apparent is that the United States over the last couple of years has increased its production by some 3 million barrels. That happens to be Iraq's daily export. But it really is changing the dynamics with Canada exporting to China because we will not let them build a pipeline into the United States. So the world's picked up new supply from Canada. The United States is now allowed to export crude. They picked up a new supply, reliable suppliers, I might add. And that is impacting oil prices. Like we've been talking about for a couple of months, if it weren't for the fighting in the Ukraine and Syria and Iraq, prices would be below $100. We're below $100, so we're looking at 95 right here is pretty good support. And if you look at this, we're looking at 97 is pretty good resistance. So 96, 96 and a quarter, sell 1, 50 to 75, sell 2. Usually we get a pause day after a trend day. We'll play for that, and you can see that we got this area right up in here. kind of a lot of volume, a lot of activity in this area. That's essentially our sell zone. And this little single print will be where our sell 2 is. On the buy side, we'll make 95 even, 95 and a quarter, buy 1. May have to pay up a little bit, and then 94.50 to 75, buy 2. Don't think we're going below 95 today. Okay, the E-mini today is pointed higher. We're going to just go take a quick look at the structure and what we talked about. On the F1 screen, listen, the profile doesn't lie. You don't know how long it's going to take for it to materialize, but this is probably the correct split right now. So got 3 days of buying, and we talked about right here this little area yesterday, and we've taken it out, that K period low and B. So right now we're shooting for the 65 area. We get through that 75. So 65 and 75 is where resistance might be. We've got higher lows, which are giving us higher highs. So everything on this screen says buy it, as it did yesterday. Looking at the F2 screen right here, no different. Volume is moving higher through the distributions. Even though we do get selling. So here's take out this low volume number, you go to that high volume number right there. Get through that. Next stop is this 64, 67 area. So the trade is selling failure to take out 60. That's S1, and then the second trade will be 64, 66 for S2. This is resistance. The market is looking higher. Everything says we should trade from the long side. We're at 57.50. This market has made us pay up to get long, so 55 is going to be buy 1. And then 50.52, which is where we'd like to pull that trade off, just like last night, would be buy 2. And we were able to just execute in that 52, 50, 53 area in the overnight session. So lots of news. Empire Manufacturing Index at 20. No one's going to pay any attention to PPI. Big numbers, industrial production up 0.3. That last month it was up 0.2. And then Michigan sentiment at 82.3. And really, the gist of the stock articles overnight was, if you look at the United States compared to the rest of the world, the EU's economy is soft and may be getting softer. China, who knows? The numbers are cooked more than they are out of the United States. So on a relative basis, long the U.S. stock market. And this really, really, really is the stuff of spreads. If the United States on a relative basis will outperform the others, so you're long the ES, Dow, NASDAQ, and you're short the EU markets, you're short China. The easiest one is to be short Japan. And you do it on a spread basis, so even if the markets go down, these will go down slower than these will. And this is the foundation of all large institutions' trading programs. They're called spreads. And through spreads, you can see the fundamentals expressed. And we see them, we talk about the knob spread daily. The knob spread long right now, you're long the 30-year, you're short the 10-year because you think the interest rates are sideways to lower. And I wouldn't bet against the fundamental traders in currencies or financials. I would bet against the fundamental players in the stock market. So the stock market is up for reasons that confuse or confound a lot of people. And interest rates are lower because of weakening economic situations or fear of war around the globe. That's it. It'll take about 20 minutes to get everything up and posted. I'm going to get busy on that right now. We're going to put the note up because it opens at 7:20. We have news at 7:30 Central, 8:30 Eastern, and we'll see how she plays. Back with you as soon as I can get it done.